Consuming lots of great content on YouTube, but afterwards you find yourself even more conflicted in terms of how to act in the market? This is common, and it's most likely because you don't have a clear, predefined plan. Let's try and figure out what kind of an investor you are, and then from there, let's make a plan that'll help you succeed in any market state. Welcome back to Woodland Pools, your place for the latest Cardano news, tutorials, and the information you need to grow your investment with confidence. Today we're going to talk about making a plan, the boring part that nobody talks about, but which is easily the most important part to succeeding in any market. We'll use Cardano as our example currency for this, but this can be used with any currency in any market. And we'll start by answering the question, what kind of investor are you? Let's go ahead and jump in. All right, so to get started, we're going to go here to TradingView.com, and I've pulled up ADA on the weekly. All right, so nice, clean chart. You'll notice that I have nothing special on here. I know my head is kind of in the way here, but there's no really good place to put me in, you'll see. But I'll just try and squish this here when we need to make a certain point to see the whole chart. But we don't need anything special on here, and the reason is that the first thing we're going to think about is time horizon. We think about what time horizon suits you best, right? So this is probably not most of you, but maybe you say, yeah, you know what? I'm going to be some gnarly day trader, and I'm going to be working on the 1 hour chart, and I'm going to be making multiple trades a day between different currencies, or maybe at most spending 2 to 3 days between trades, right? Or you might say, no, I'm the exact opposite, and yeah, I would like to be involved in the market, and I want to take advantage of when we're way down at bottom ends of ranges and trying to take advantage of, short-term cycle peaks and selling when we're up here. But I'm not planning on even looking at my computer more than maybe once a week. That's totally fine. Maybe you're even one step further and you say, no, I'm more of like a monthly trader. And I'm going to just maybe make a couple of buys when I know is a good spot, and then I'll check in when I start hearing news about FOMO buying and things taking off. Then I'll poke my head in and see what's going on. Or maybe you're on completely the other end of the spectrum and you're like, months, that's way too granular for me. I'm buying, I'm hodling, and wake me up in 10 years and let me know what the price of ADA is then, right? Or maybe, due to tax implications, the timing is a little bit out of your control and you're saying, hey, no matter what price I buy it in or how things are going, I'm going to force myself to hold for at least a year because in my country, that gets me past short-term capital gains and I'm now in the long-term capital gains tax category. And finally, maybe you're completely time agnostic. Maybe you say, the time is not really what concerns me. I have specific levels that I want to hit, and when those levels are hit, it could rocket up tomorrow, or it could take it 20 years, but I'm going to check in when it hits this price, and the amount of time that it takes to get there is irrelevant. All of these strategies are fine, but as I talk through them, probably one of them resonated with you more than the others, right? One of them was more like, okay, I think this is more me. So that's good, and hold on to that, because that, let's switch back here to the weekly, that is going to be the first factor that we're going to want to consider, and that is time horizon. So let's get this on our page, time horizon, okay? The next thing we'll want to consider on how we manage and grow our overall investment is price targets. And this applies both to the target for entering the trade as well as the target for exiting the trade, all right? So there's a few different things that we can think about here. This is where, depending on your interest, you might start actually pulling up a chart and looking at some tools. So let's say you're a big fan of traditional technical analysis and you say, okay, I want to work off of Fibonacci retracements, right? So I'm going to draw from here up to this previous peak, and I'm a big fan of Fibonacci's, and I want to be buying whenever it's below this level, right? Or you say, I like moving averages, and so I'm going to throw up some moving averages up here. This is a 20-week moving average, and as long as it's below the 20-week moving average, that's a good buying zone for me, right? Or you might say, okay, I'm more interested in price structure, and so we see here that it went up and it crashed back down and it tried again and it didn't. So now that we know we're in a downtrend, I'm going to start buying when we're down here. And similarly for sells, you might say, okay, well, looking at our previous, again with Fibonacci's, looking at from our previous peak all the way down to here, and let's flip this guy around. So you say, okay, yeah, I want to be selling at 50% of the previous range, right? Or maybe you say, no, you know what? I want to target the previous all-time high, like this point here is where I'm going to first be interested in this whole thing, right? Or maybe you say, no, you know what? All-time high, that's my starting point. I don't even want to consider this until we're double the all-time high. So let's draw a horizontal line here. The all-time high was 140. So I don't even want to consider this until we are at 280, right? And that'll put us way up there. Another way to look at it is you can look at it relative to the trade that you made as part of your investment. So if you said, okay, well, my average buy-in between my different buys ended up being around here. I was buying during this whole period, and my average buy ended up being at, 15 cents. Or let's say it was here, and it was around, 22 cents or 30 cents. Maybe you say, you know what, I'm going to take a look when it has doubled, and maybe I'll sell half of my original investment so that I get it back, and now I have, what's called a free look. And no matter what happens, up, down, or sideways, I'm fine. Some of you might hear that and say, there's no way I'm selling half of my ADA, right? And that's totally fine. So once again, the next thing that we need to think about are what our price targets are. What are the triggers that say, okay, now is the time that I'm going to start buying? And what are the triggers that say, okay, now are the time that I'm going to start selling? So with this next chunk of information, again, one of these probably resonated with you better, right? It doesn't mean that you necessarily even know how to do all these different things, right? Like if you're interested in Fibonacci tools and how to use them, or you're interested in analyzing price structure, there's no shortage of technical analysts you can find on YouTube that can help you give their analysis on what these different things mean and how to read them and how to do it. And I'm not suggesting that one is better than the other. Depending on what technical analysts or what market analysts you enjoy to follow, they all have their favorite tools, and whichever one you think is, okay, this is the one that I like following, that's totally fine. But the idea is picking one of these different strategies or a hybrid of those that appeals to you and making that the price target part of your plan. So with our price targets figured out, let's get that on our page. Okay, so now we've got an idea of our time horizon, we have an idea of our price targets. The next thing to think about is the level of precision that you want to have for these targets, right? Are you trying to be the trader who perfectly snipes the bottom here, and you're saying, I want to be the guy or gal who bought ADA at 1.7 cents, and then, whenever this does top out, you say, I'm the one that sold at exactly the top? Or you're going to say, you know what, I'm fine. I don't need to be the one who got the bottom and the top. I just want to be accumulating and then giving back to the market at reasonable places. And so I'm going to try the notion of dollar cost averaging, right? And we're going to go into a lot more detail on dollar cost averaging in a separate video. But for those of you that know the basics of it, it's about setting up a weekly cadence or a monthly cadence and then saying, I'm going to buy in a certain amount each week to start accumulating. So maybe you say, okay, when we were over here, you said, I'm going to start dollar cost averaging, and you're buying each week. And so then your average price keeps going down, maybe it goes up a little bit, keeps going back down. But the whole idea is that you've been accumulating during this whole range. And similarly, a lot of people think about dollar cost averaging for buys, but you could also dollar cost average for sells, right? Once you have decided what those targets are going to be, you say, okay, after this fib or after this price structure, maybe your price structure is the all-time high. After that, I'm going to start dollar cost averaging my sells, right? And then there's all different kinds of strategies to dollar cost averaging. Do you want to buy and sell at the exact same amounts each time? Do you want to make it such that as the price gets lower, you buy more, and as the price gets higher, you sell more, right? There's no wrong answers here, but there's some other things to consider in terms of, even with our level of precision, whether we're not trying to snipe the bottom or top, even in the realm of dollar cost averaging, how do we want to approach the average of buying and the average of selling? So with that covered, that is now the third part of our plan to consider is our precision. Okay? So now we've looked at our time horizon, our price targets, and the precision with which we want to be working at those price targets or price ranges. The next thing to consider, especially for a coin like Cardano, is how do you balance the amount that you're going to be trading, even if it's on a very long-term scale. What amount of it do you set aside that you say, this, in my mind, is a tradable portion, and how much of it do you just stake and not touch for a long time, right? Are you thinking about maybe the ADA that you're staking right now? In your mind, is that, okay, this is a short-term place for me to hold it and have it gain some interest until it hits the levels that I'm looking for, and then I'm just going to sell it all? Or you could go the other way and you say, no, I've set aside my investment money for ADA. I am staking that away. And yeah, I'd like to take advantage of some of these moves, but maybe what I'll do is I'm only going to actually ever sell at some of these critical levels. I'll sell the rewards that I've gotten from my staking, but I don't want to touch my actual nest of my staking itself. Or maybe you're somewhere in between. Maybe you say, okay, I will, of my 100% that isn't my staking delegation, I'm going to at most sell 25 or 30 or whatever percent of it seems right to you. And then of course, there's always that really long-term view of, you know what, I don't plan on trading any of this. I mean, granted, this is all a large sort of investment management, but I don't feel like being active in this at all. My whole objective of getting into Cardano is that I'm going to continually be putting money into it, and I'm not even going to touch it for 5, 10, 15 years. So if it goes up or down in value, that's fine for me. All I care about is accumulating more ADA and then checking in on it in some long-term time horizon out in the future. So then that brings us to the next element in our plan. How are we going to manage trading versus staking? Okay, so let's go ahead and clean this up a little bit because we don't need these levels anymore. Okay, so right now we've got our time horizon, our price targets, the precision around those price targets or ranges, and then the breakdown on how much of it are we actively trading and how much are we setting aside and letting it just grow for us with staking. Then that brings us to risk management. And the first thing we want to say about risk management at a macro sense of our whole investment into cryptocurrency is that we never, ever want to invest more than we are able or willing to lose. People who put themselves in situations where they're basically betting the whole farm on crypto working out and they're remortgaging their house or something like that, those are the people that unfortunately get squeezed when things get tight and end up making very emotional decisions that are usually self-destructive. So never invest more than you are able to lose comfortably. Then that being said, as you put in some amount, X amount, I'm going to put in $100. That's my full investment for everything. Of my $100, how much of that am I ideally okay with seeing going down before I start adjusting my plan? So granted, it could be that tomorrow I lose track of things and $100 is gone. That should not be ideal, but it should be okay. That shouldn't be something where now you're out on the street because you have a payment that you can't make. But once we've covered that baseline, how far down in my $100 investment am I okay with before I say, okay, this experiment didn't work out. I tried it out and I wanted to give it some amount of time, but my macro investment is now down this much and I need to get out. Now, something to consider with that, and another reason why, especially for cryptocurrency, it's so important to not invest more than you are able to lose, is because some of these moves can be quite dramatic, right? So let's say, for example, let's say we had gotten involved in crypto up here, right? Somebody had reached out to us because they heard a guy and a person told them, and we bought ADA at exactly 139. So we timed the top perfectly, but we timed it on the buy and not the sell, right? And then what happened? From when we bought in to the March capitulation of last year, we saw a 98, almost 99% retracement, right? So that's pretty nasty. I mean, if you had put in your $100, right, you would have about $1.20 left. That is pretty rough to stomach, right? So that's why you need to think about, how much am I willing to lose? This is not financial advice. I'm not suggesting that if you had bought way up there that you should hold all the way down because, hey, trust me, it's going to come right back. There was no way of knowing that at the time, right? But these are the kind of things that you need to think about. What if it does retrace 98%, right? Is that something that I'm comfortable with? Or are you going to say, you know what, if it goes down more than 50%, I have to get out. But just keep in mind that if you do that, you may be the fear that's capitulating on the way down when things are going to eventually turn back up. And there's no way of knowing. So these are the kind of things you need to plan for ahead of time. And in part of your risk mitigation strategy at the macro level, you might want to think about in terms of, okay, how much of this am I setting aside? How much am I okay losing if things go poorly, right? And really think through this scenario. So with that, that's our next element to consider is risk management. Macro risk management, right? Okay, we're starting to get a lot of things as part of our plan here. time horizon, price targets, precision. How much do we want to trade versus how much do we want to stake? And then looking at our risk management. So with macro risk management out of the way, the next thing we want to think about is micro risk management in terms of how much of our total investment portfolio do we want to risk on a single idea. We probably don't want to bet the whole family farm. We probably don't want to bet all $100 on one specific coin, right? On this channel, we're very bullish of ADA. We think Cardano has a great future ahead of it. But again, not financial advice. You probably don't want to take your full $100 and put it only into Cardano. Maybe you want to put some in Bitcoin, maybe some in Ethereum, right? You want to do some research on what are some good hedges of currencies against each other to have a better risk-adjusted portfolio, right? The other thing is, how often do you want to be managing your risk, right? This is totally different than managing the actual like trades that we were saying before of how we enter and exit specific. But how often do you want to manage the balance of your portfolio? Do you want to be actively rebalancing and saying, okay, I want to make sure that each one of these cryptocurrencies is never more than a certain percentage? Or, once again, at the sort of set it and forget it mindset, do you want to say, okay, I'm going to put X amount into Cardano, Y into Ethereum, Z into Bitcoin. They all have their starting values. Wake me up in 20 years, let's see where they're at. All of these are fine, but you want to think about which one of those sounds more like your preference on how you want to manage things. And so, to go along with our macro risk management, we have our micro risk management for a specific currency or specific portion of our investment. So now with all of these elements, time horizon, price targets to enter and exit, precision of which I want to time my entries and exits, how much I want to trade, how much I want to stake, how much am I willing to invest at a macro scale, how much am I willing to invest on each individual currency? Now that I have all of these things, it's time for us to actually make our plan. And what you want to do when we say making a plan is to actually write down what your plan is. Take these different elements and other ones that you might have found and researched online and write them down and see what they are. And actually, I'll pause here. These are some of the things that we consider when we're trying to make our plans for different investments. But I'm curious, what strategies have you used in building your plan in the past that's worked out well for you? I'm sure that there's some really good information out there in our community. No one knows everything, right? And maybe some of you, you're like, hey, I just watched this video just to see the content of your plan, but you've got it all wrong. Here's some things that you can add. Some of you might be professional portfolio managers for all we know, and the way that you found our channel was because you needed help setting up your ledger, right? Like, please let us know and comment below so we can all learn from each other as we all go through this journey together. And once we have this plan put together and we have it written down, then the important thing is, so now you've got your starting point for your plan. Then you really want to think through, okay, so this is my time horizon. Here's when I would enter. Here's when I would exit. Then you really want to start doing some role playing in your head of, okay, so given the plan that I've decided in terms of I will buy at this level and I will sell at this level, what happens if tomorrow the price of this asset triples, right? Or what happens if tomorrow the price of this asset tanks 50%? Or what happens if over the next 6 months the price of this asset tanks 98%, right? Or what if I am expecting it to do something and for the next 4 months it just does nothing at all, right? You really want to take your plan and vet it in your mind, play these scenarios out in your head for every one of these situations and see, how does that make you feel? How does your plan perform in these different scenarios? Are you okay with the outcomes of these different scenarios, right? And really think through that and internalize it now when you're thinking objectively and rationally before these huge spikes or these huge crashes, right? And remember, the hard part about investing or the hard part about trading, right, is not the tools that you use. It's not the squiggly lines in the charts, right? That's actually the easy part. You can either do some research and find some great approaches yourself, or find some trusted sources that help you think through. And so when we're aggregating all of our sources of information across YouTube and articles and all of these places, and we hear them talking about this level or this target or this time frame, we want to make sure that we are taking all that information and we are running it through the lens of what our plan is. This is how we keep ourselves from getting tripped up, because we may have one person that we watch that's a really great technical analyst, at picking apart levels, and we have another person that we watch who's really great at looking at longer term momentum things. Or maybe we look at some people that aggregate fundamental news on your favorite cryptocurrency. The idea is that the way that we keep ourselves from getting spun around in circles and half chasing one person's idea and half following the other, and then at the end of the day sabotaging ourselves completely, is by saying, okay, let me take the little bits of information that they're each providing and let me see how it factors into my plan, and then I'm going to use all of that to move forward. The hard part is then doing the thing that you said you're going to do when the time comes, okay? Write down your plan, stick to your plan, and that is how you will succeed in any market state. Hopefully that was useful. I know it was a lot of information. If you like the way that we methodically go through these things, check out our video on how to select a stake pool and which stake pool is right for you. As always, if you like the content and you want to support the channel, consider delegating to our ASPEN stake pool, which we'll link below. We'd truly appreciate it. So check out our video on Pool Tool, find the right pool for you, make a plan and write it down, and we'll see you next time.